All right, guys, let's get started. Wait a few minutes for those that come on later. We'll record it and send it out as well. So um let me see here. All right. Well, hey, first welcome everybody here. I've got a special guest here that I wanted to introduce you to, and this has kind of come after a lot of people have asked me over really the last few years about what people are investing in. I feel like I've done so many videos or content on me explaining what I see people investing in, or maybe what I've done in some of my own deals. But we're putting together kind of some more content education on what people are doing and talking to the people directly, like my guest today, Alex. And so, this is we're going to leave plenty of time for questions at the end, and more than anything, the goal here is to give you information as you listen about kind of what the storage market kind of place is, the industry, what it kind of looks like, who's doing it, what's going on in that space. And then from my perspective, I've got lots of people that are asking me, how do I get involved in that using my IRA? And so for some of you that are listening today, you might already have an IRA with us at Horizon Trust Company. For the other half of you, which is about half and half of who've registered, you might have a retirement account, but a traditional kind of retirement account, something that you might have with your broker, Fidelity, Charles Schwab, whatever it may be, and you might not be aware that you can be doing this with your retirement account. And so I'm going to talk a little bit about the retirement kind of side of things, but more so asking Alex a little bit about what he's seeing. And so I've known Alex. The reason why Alex is here today, for me in particular, like I said, two reasons. One, people are asking me, can you have guests that talk about asset classes that they're actively involved in? That's number one. Number two, I've known Alex now, I don't know how many years. It's probably 4 or 5 years now.
Almost 4.
Yeah, 4 years. And I've seen him consistently. It feels like 5, right? I don't know. I see him consistently. I see him almost every quarter having success in his marketplace. And so for me, I don't get wowed by somebody that speaks for the first time about his successes or her successes. Alex has been consistent in his marketplace and having success in a couple different places. And so with that said, welcome, Alex. Alex, thanks for being here. Yeah, thanks for being here. And so before we get going, can you just give us a little bit of background on what you've done and what you're, give us a little bit your history of where you are today.
Yeah. So I've been a full-time real estate investor for over a decade. Have wholesaled over 1,500 residential properties. We currently own over 250 residential doors between single family, mobile home parks, and a multifamily. And then we have acquired 9 self-storage facilities in the last just under 3 years. And that's 210,000 square feet of self-storage. We're currently about to move to phase 2 to develop 80,000 square feet in Tallahassee, Florida. And so for the last 3 years, been full-time in self-storage, while my team, my brother, have been taking over the residential side of our business and allowing me to focus fully on self-storage.
So also, well, I cut you off. But also importantly, married, a beautiful daughter, and another one coming. Did you find out the sex yet?
Yes, it's a girl.
All right. So 3 girls in the house.
Yeah.
You're gonna have to work extra hard.
Right.
Well, good. Well, hey, thanks, Alex. So let's just jump right into it. For those listening, I mean, storage, investing in storage complexes and units and mobile home parks, that's like a buzzword. That's like back in the day, 5 years ago, when everyone said crypto was the thing, right? I'm sure it still is for a lot of people. I'm not going to hate on it at all, but storage. So why are people talking about storage and investing in storage units right now? Why is that? Why do I hear it everywhere right now?
Yeah, right now I think it's all over the news. Like big companies are gobbling up other large companies. Public Storage just bought out Simply Storage. They did deal with like Life Storage, and so there's a lot of big money in the asset class. And so Wall Street money, BlackRock, Bill Gates is invested in self-storage. So there's a lot of money on it. And so there's just more headline news, but essentially it's just a great asset class, especially one for to get into, because there's 60% of self-storage is owned still by mom and pops. So it's still fractional ownership. And so you can still pick up great deals. And it's more than real estate. It's really a business. So a lot of these mom and pops, they've owned it for a long time. They've built it themselves. They may have no debt or very little debt, and they're happy with the cash flow they're receiving from the property. But they're not really treating it like a business. They're, not picking up the phone calls. They're not doing revenue management. They're not doing collections. And essentially, they're happy with the cash flow they got. And so when you can find some of these sellers, when they're ready either to retire or move on, or just sick of, the business, they can, you can take over some of these opportunities, implement these strategies of technology and automation, actually run it like a business, and really maximize the value of that property. And we doubled the value of 3 properties in less than 2 years.
So, and you've also, correct me if I'm wrong, you've also gone a full cycle. You've bought and you've sold. Can you walk us through, like, 3 times? Okay. Can you take one of those? I assume all 3 you've made money on, right? There's no losers in that. So, which is why you've bought more. But can you walk us through, like, give us one example? Tell us kind of where you bought it. Just tell us about one deal in the whole cycle, if you don't mind.
Cool. So I'll give you the first one. Our first deal got through direct mail campaign. This guy was ready to retire, and his self-storage actually really wasn't his main business. He owned a tree company on the same property, and he was operating his tree business out of this large commercial warehouse. And so the self-storage wasn't being ran like a business. It was just extra income for them. It was 98% occupied, but their rents were 50% below market. So if the 10 by 10s were in the market, the neighboring facility was getting $100, they were getting $50. And so the rents were extremely below market. They wanted to sell the property. They were retiring. And so we were able to buy that property. We bought that property at a 5 cap, which essentially, if we bought it all cash, is a cash on cash return. It was a 5 cap, well, 5%. This was a 7 cap market in 2020. And so we overpaid, but we bought it with seller financing. And the reason we were agreed to overpay essentially a 5 cap instead of 7 was because there was immediate add value that was quickly realized. And in 6 months, we turned that 5 cap property into a 12 cap property by renting out the warehouse he left. He left his tree business. We rented out to an AC company and got $1,750 a month on that unit. We raised everybody's rents to market or slightly below market. I think out of everybody, and we were 98% occupied, we had 1 person leave that had 3 units, and that was it. And we were able to increase the parking lot. We were able to add another building of storage, and we just implemented we did a facelift of the property first before we started doing some of these increases in rents. We painted the building. We put in new gate systems, automation where they can book online, they can pay online. Most of the people were paying cash before. And so we just simplified the process for everybody. We had hired somebody, boots on the ground, to be at the facility on call by appointment, only paying $1,000 a month for a payroll. And so we lowered the expenses, we increased the income, and all this was really realized in 6 months. So in 6 months, we really turned the property around. And we just continue to manage the property well and continue to push rents every 6 months, essentially. And that's another good part about storage is the leases are month to month. And so you were able to adjust quickly with, inflation. So as inflation is rising, you're able to increase your rents for taxes, insurance, and cost of living. And so that was a great deal that we were able to quickly implement our add value strategy. And it was very simple. That's like the really great part about self-storage. A lot of the add value, unless you're really developing multiple buildings and building a lot of square footage, the add value can quickly be realized by just doing better marketing, answering the phone, and doing collections and revenue management. So like those things alone can drastically increase the value of a property that's not being ran correctly.
Well, it's funny sometimes when I heard you say that. It's like, it's just the simple things, like, right? I mean, when we buy something or a service, we really all we want is the service we paid for. And And if it excels, even better. But I would say in a lot of cases, most companies, which is why I actually started the trust company, was I just wanted a company that was going to do what we said we're going to do. We didn't have to do it quicker than anyone. Just if we say we're going to do something. And so it sounds like it was kind of simple. Like, it's a simple business. We just need to, have a process in place, have some marketing in place, have the right team in place, and then you can just increase what I like about this business. The more I learn about it, and I have invested recently in some storage units, is that most of the people that are paying are not, knocking down your doors and saying, hey, the plumbing's down, or we got a problem, or that the electricity's out, or you're not dealing with all that. You're just more, you become kind of a collection agency, right? I mean, is that kind of what you become here?
Well, I typically say, obviously people like storage because there's no tenants and there's no toilets. And we really truly have no tenants. It's really a customer. They're not really tenants. They're customers. They're utilizing the space, leasing the space from us. And, there's tenants who are just storing their belongings, and then a lot of, customers who are just storing their belongings, and a lot of customers who are actually businesses who are storing either their inventory or their supplies for their business, or, a lot of like HOAs won't allow you to park your commercial vehicle on your own house that you live at. So they even store with us on parking. I have a property in Texas where we have like 200 parking spots. And so there's a lot of utilization from business owners utilizing it for their businesses.
Well, look, I'm gonna have to remember that one. We like this space because there's no tenants and no toilets. I mean, I feel like that's a good tagline. No tenants, no toilets. That's the kind of asset that I want to manage. I like it. Well, good. Well, look, so Alex, how I've invested in assets like this is investing, as an IRA investor using my self-directed IRA account. Do you also, I mean, so you're the one that's obviously managing it and finding it. And so how do you typically fund these? Do you have other investors? Is it just you? Do you have financing? I know you have an IRA with us at Horizon. So I know you obviously didn't use it on this asset because that would be a problem. But
Yep.
as far as other IRA investors, is that something, just kind of try to relate it a bit to Horizon Trust? Is that something that you've done?
100%. So yeah, they can invest as like a private lender. So that first deal I mentioned, we didn't need a lot of capital, and because we got 85, like it was like 88% seller financing. So we actually brought in a second lender, a private lender. And now they didn't use an IRA, but they could have used an IRA on that one and invested into the gave us a loan in second position and got a return back into their IRA as just a strictly lender. But most of our deals are syndications where we're pulling capital for these deals. And so, right now we're doing a syndication and a capital raise where we have several people investing with their IRAs into the syndication. And so simply they invest into the syndication, they get a piece of equity, they get a preferred return on how much they invest. And they're essentially a part owner of the deal with us. And so it's truly hands-off commercial real estate investing. It's truly the only passive income in real estate, because even though this is very, the other reason I like storage is not very management intensive because of technology and automation, but it's a business. And so we're doing revenue management. We have to manage the manager. So the only truly way, to invest passively is by being, a passive investor, and doing that through syndications is the number one way. So we definitely welcome IRA investors into our storage deals.
So what kind of, and again, this is no pitch for anyone. This is for educational purposes. But people ask me all the time, what's kind of the range that of return that people would expect from an equity position in these storage facilities that you've seen? Not necessarily like when you're the owner and you flip it all with your own money, but like in general,
Yeah.
what are investors seeing when they invest in these kind of deals?
So I see most indications with existing facilities for self-storage and for multifamily, they're roughly the same. It's probably about I'd say 15 to 18% IRR is kind of like the target that most people go for. We look to underwrite our deals where we can provide a 20% IRR. And so ideally most deals, because of commercial banks are typically 5-year loans, we typically try to underwrite it at 20% IRR. So that way in 5 years, you're doubling your money. Now those other two that we exited, we did have investors in those deals, and they were part owners. And so on those two, they got a 8% pref, meaning, so say if they invested $1 million, they got $80,000 a year as a preferred interest payment to them, paid out quarterly. And then they got equity ownership. And so when we sold the property, because we doubled the property in less than 2 years, and did so much add value to the property and got a good sale price, we were able to deliver on one of them. It was like a 36 or 34% IRR, and the other one was above 50% IRR. And so really great deals.
You didn't call me in that deal. You didn't say, hey, Greg, hey.
we planned on holding it for 5 years, and we planned on not getting to those numbers until like year 4. And we just were able to just do the add value so quickly. Like, we turned the properties fast, we leased them up fast, and they were big add value deals, and we just implemented it very quick and quicker than we thought. So we always try to be very conservative with our underwriting, and we just, killed it. And we just, it was the right time to sell and exit. I never really planned to sell them. I planned to refinance, but it didn't make sense to refinance at that point in time with the interest rates the way they were. And, the bank's kind of tightening up. And so it only made sense to sell because people were still paying a low cap rate.
Perfect. Now, look, I've got a couple more questions for you. And before I do that, I just wanted to share, because people will ask and there's some new that came on here in the last 15 or 10 minutes, at Horizon Trust, like what we will do, and we want to give you as much content and education as possible. That's why we have Alex here as a guest, is let you know that there's real people doing real deals in this marketplace, in the storage facility place, and other obviously assets as well. And here at the end, and also I think in the chat, I'll make sure that Claudia puts in our link for those of you that are Horizon Trust Company investors, and wanting to learn more. Here at the end, I've got a couple slides and give you contact information for Alex. You can always reach out to him, ask him questions. I didn't ask him, but I know who he is as far as kind of person he is. If people have questions, just to want to pick his brain about the industry, he'll tell you. He'll give you kind of straight up how it works. And if there's a question we don't get to here in a minute, you're going to get his contact information. Obviously, you're going to get ours as well for those of you who are not IRA investors, and you want to use your retirement money. If you're on this call and you're like, hey, I've got an old 401k, that qualifies, by the way. If you have an old 401k with the previous employer, probably 50% of you do, or you or your spouse, that's just sitting there that might only have $25,000, $50,000. You can open up an IRA, a self-directed IRA, and start investing in things like this. So you're going to get all of our information. Also, Claudia is going to put a link here as well for those who want to set an appointment. It's just a strategy session. All we want to do is look at your IRA with you to find out what kind of IRA you have. And if you're interested in learning more about how to use your money, and how to use your retirement funds, investing in alternative assets like this, or wholesaling, whatever it may be. If this is your cup of tea, you're going to learn more about this here in a second, and we'll answer questions. But I just want to make sure for those of you here with me right now, there's going to be a link if Claudia hasn't already put it there, and we'll give you as much information as possible, and you can set an appointment with us and we'll help you. That's my plug. That's my commercial in a break here. But back to you, Alex, here. So tell me, like, we always talk about all the positives. You've not lost money in a storage facility. So, but let's give me, there is some negatives, right? So like, look, from my perspective, the negative for me is I don't want to go out and do what you're doing, right? I think a lot of people want to be in a storage facility, think they're going to go find a complex. I feel like the art in this is finding the asset that's undervalued, right? I mean, that's the art. And then you bring in your team and your process, which is the second piece that I think is very critical too. What is there a pitfall? Let's just say that I'm not gonna work with you or someone else. I'm gonna go do this on my own. Give me one or two pitfalls or things I should be aware of when investing in storage facilities.
So right now, the market for self-storage in the past 2 years, kind of like short-term rentals, was like an all-time high. Rates all-time high, occupancy all-time high, and now it's kind of like leveling back off. And so everybody used to be like 95, 98% occupied. We always like to be like 92% occupied because you can do the revenue management play and kind of maximize your value by increasing rates based on supply and demand in the market compared to you and the neighboring facilities. However, now people are like, oh, it kind of softened a little bit. It hasn't really softened. It's just going back to historical norms. And so for short-term rentals and for self-storage. And so I think the industry average, I think still is like 85, 90% stabilization, where everybody was used to being in the mid 90s. And so when you're looking at deals, I would underwrite them at an 85% stabilization. I would not look at that like assuming that you can always push rents higher and higher, and you can always be at 95% occupancy. If you're adding value, if you have a property that you do find that's 95% occupied and you're trying to raise rents, it's unlikely that you're going to keep all those tenants as well. And so you really it's making sure you underwrite it correctly. Obviously, interest rates are much higher now. And so you really have to buy great add value deals, or what's really been a benefit for us is I'm very good with creative financing. I've built majority of my portfolio from creative financing. 3 of the 9 self-storage deals we purchased were with creative financing. And so
let me pause on that. Sorry. Creative financing. So for me, for those that, again, sorry if this is elementary for some of you, but I want to just dumb it down. Creative financing couldn't be like seller financing, right? Yep. And so Alex is able to go in there and find a deal, get seller financing. And from an IRA perspective, I'm trying to also relate that. Some people ask, can an IRA borrow money? The answer is yes. An IRA can get leverage. What an IRA can't do is guarantee the leverage. Does that make sense? So like right now when Alex goes, and if he's going to go acquire a property and get debt, he's most likely signing loans in his personal name on his behalf, and his IRA cannot own it. But if an IRA comes in and takes on seller financing or takes on non-recourse financing, an IRA actually can do that. And so it gets really powerful. Now there's UBIT taxes, there's potential some tax burden. And I'm not going to go too deep into those rules and regulations, although we can do that in a strategy call with my team. But there's still so much upside. So I want to share that with you, because when I think about these storage facilities as well, they can be pretty expensive. Right? I mean, so it could be millions of dollars, or $1 or $2 million, but my IRA might only have $50,000 or $100,000. Well, that's why you do syndication. So my little IRA can be one of like 10 or 20 IRAs, and then it can also borrow leverage, and it's got its own little tax consequences, but it still is a win. And on that, and sorry to interrupt you on your question here, I got kind of excited, is I'm just thinking about like the stock market, right? And like everyone keeps buying into this hope and praying that they're going to just keep going, make 6 to 8%. Sorry to go out for a second. Make 6 to 8% on your money, but look, realistically, the market's been getting crushed, and it goes up and down. And what I love about this, it's consistent, even in a down market. So if you talk about it going down from 95% to 85% occupancy, that doesn't mean that your investment goes down 10%. It just means that revenue goes down a little bit, or the value goes down a little bit, maybe from a 12 cap to a 10 cap. And that's what's sexy about real estate in general, but specifically the storage units. So anyways, I just wanted to add that in there as you're talking, Alex. I don't know if you remember where you're at when
no problem. I love that too. So, and I love also that I can physically touch the building. Like it's not going anywhere. Like some of these stocks can just disappear like that and all your money's gone. So having a physical building there that as a hard asset, obviously is a great benefit. But I was, talking about creative finance and how like that is a huge benefit of, if you can really understand creative financing, seller financing, how to structure deals correctly, like that's what I'm really good at. And so we've been able to, negotiate several deals. The last deal I bought was $5.5 million, 85% seller financing, 3% interest, amortized for 30 years, 10-year balloon, like killer deal. And, already in like 2 or 3 months, it's worth $7.5 million. So there is opportunities out there. And it would have been probably hard pressed to even get the bank to finance it, even though there was so much add value, because this wasn't just like a straight storage deal. There's a lot of parking. There is office warehouses. It's a little bit of a unique deal, and so it just doesn't fit the box's cookie cutter template. And a lot of times I've heard from a lot of other people, sellers, buyers, that last minute they're having banks pull out, even after the kit amendment signed with them. So if you're able to structure seller financing with these sellers, a lot of them do own it free and clear. A lot of them have very little debt, and so that has been the benefit for us on being able to get deals right now. We have 200 contract, one closing next month, and they're all with seller financing. Both of those are with seller financing.
All right. Well, I'm going to share. I'd like to share your contact, our contact here, and we're going to keep going answering questions. If I can do that on here, I'm going to do the best I can. Alex might have to come in here and show me. Can you see the screen here, Alex?
I can, yeah.
All right. Let me see here. Let's see here. Is that better? Okay. So as far as information, we're gonna go to questions and answers here, if that's okay, Alex. And if some people have asked, how do I get a hold of Alex? There's probably other ways, but I know Alex will respond to this. So if you can find him on Instagram, right, Alex? It's okay.
100%.
So you can find him there with questions, and a couple little other pieces here. My Alex Padilla put in here, and then there's a link that we're going to put in the chat for those of you that want to have a call and talk about their IRA. If you're on this call and you want to know more about how to invest in storage facilities, obviously contact Alex. And again, this is not there's no sales pitch here. There's no investment pitch here. This is, we want to arm you with information so you are smarter with your retirement account. If you're in that boat where you find yourself investing in the stock market and are unhappy, don't like the returns, they're not consistent, you too can be investing like me in people like Alex and others like Alex. I find a ton of value in leveraging people like Alex, their experience. They love going and finding the deal. I don't need to make 40% returns. I mean, I'll take it, but Alex will make those bigger returns. If I can make consistent returns, sorry, this is like, I just got to slow down here. I don't know what's going on here. I'm going to stop sharing this and let Claudia just put the link up for an appointment. All right. Are you still there?
Yep.
And let's answer some questions. And Alex or Claudia, I know you're on here with us. If those of you here that want to learn, see if their IRA, if you're not sure if your IRA or old 401k qualifies to self-direct, meaning investing in alternative assets, set the appointment with us. The link she's going to put in the chat box. But let's answer some questions before we wrap up here. So let's see here. How can we invest in Alex? I think you already did that. All right, got that. Greg, is my solo 401k okay to invest with? If you have a solo 401k, a self-directed 401k, yes, it is. Looks like you got some answers here already. How much does it cost to turn your retirement into a self-directed IRA at Horizon Trust? The cost is less than 1%, or up to 1%, I should say. So our fee schedules on our website, we open up literally hundreds of new IRAs every single month. It's 1% or less starting in year 2. And so what I tell people is, once you start with this, you're gonna pay less money than you probably are with your financial advisor, starting at year 2 going forward, and also the type of returns you're going to get. And the example that Alex is giving, all of a sudden you're able to unlock your retirement account, use your retirement account to invest in something that's going to give you more consistent, larger returns, hopefully, right? Obviously, I got to disclose that there's no guarantees, right? This is not, I don't pick, we're not a fiduciary. We don't pick and choose your investments. You look at them. And that's why self-directing is not for everybody. If you're on this phone, you're like, hey, look, I don't want to do any due diligence. I don't understand it. And I just, the stock market's where I feel more comfortable. That's where you should stay. Only 4% of Americans self-direct. And realistically, that number should probably only be 10%. people that should self-direct are people that are a bit over the stock market or want to diversify their retirement funds into something a little bit different, into something that is tangible, like Alex said, that you can touch and feel. That's a lot more exciting. So anyway, so I think that as far as fees go, you're gonna make bigger returns, and it'll be lesser in fees. The only reason why in year one it could be different, it's based upon year one what kind of IRA account you set up with us. So once you do that call with us, set an appointment, we'll walk you through that. What other questions here, Alex?
I see one. My name is John. I live in a town and suburb of Buffalo, New York, and I'm seeing life storage opening up in old industrial buildings and new from scratch. Is it more beneficial to invest in an existing storage facility or finding land and building from scratch? Can you elaborate on this and the pros and cons of financing?
Great question.
So, for existing facilities, what I like about existing facilities is typically it's immediate cash. A lot of times we're dealing with mom and pop owners, so the add value can be quickly realized. It's easier to get financing. It's easy to raise capital on development deals. You have to go through planning. You have to build the property. You have to get the permits, and then lease it up. And so it's a longer process to get, paid, but the gains are much greater. And so there's pros and cons of both. The financing is a little bit tougher. It's a little bit tougher to raise the capital. You have to get investors who are willing to be willing to wait a little bit. And IRA investors are actually probably perfect for development deals. So if you're raising money, the IRA investors are probably the ones to go to because they're not touching the funds. The money goes back into their IRA. So that's why we have several in our development deal that we're doing, several IRA investors because of that fact. And so the returns are much greater. So it's all depending on, kind of you and what you're looking for in this deal. Whether it's, immediate cash flow or long-term growth. And so it's kind of a, this or that scenario. There's a lot more probably development deals out there right now because they're a little bit tougher to get to the finish line. But if, we're already in the middle of the project, so we have a step ahead of a lot of people. But existing properties is, what we're looking for right now, moving forward, because interest rates are so tight or so high that we're able to structure seller financing and work directly with sellers. And so that allows us to, have an edge on the marketplace with existing facilities.
Perfect. A lot of questions in here, and I got to triple say this for the third time. Myself, we own the trust company. And so if you decide you want to work with or learn more from Alex, he's put his contact information there. Our focus at Horizon Trust, we've done this for 14 years, is and one of the questions that came up is, can I just do this from my IRA at wherever it might be? Most brokerages and IRA houses and companies will not allow you to invest directly into a alternative assets like an LLC or syndication. You need a company like ours, a trust company like ours, that allows you to get access to your retirement account and invest it in something like this. So, and I will say, for those of you, if you have a 401k with your current employer, those those don't qualify for self-directing. I mean, you couldn't put those in a storage facility or in cryptocurrency or gold, precious metals. We have clients all over that will invest part of their money in a syndication, something like what Alex is talking about, that might lend, might do a wholesale deal, and then leave some of the money in the stock market. You can do that as well. When you want to self-direct and try something out, you just need a company like ours that I wouldn't say manages, that holds it in custody. And our job is to report contributions and distributions to the IRS and valuations. That's what we do. Been doing it for a super long time. And look, our goal is to give you content, give you information, and you go and do your own research, your own due diligence. And what I always like to say is, some people get all excited about interest rates. Man, I want to make this huge, these 20% that Alex is saying, or 30%. I really appreciate and have learned the hard way of investing in the right people, the right operators, the right managers. That's what protects you. Sure, you can invest and you got collateral in an LLC or in maybe even a piece of property. But when you team up with the right people, that's what protects your money. And I'd rather make 10 or 12% solid than a potential 30 that ends up being a negative 30. And so consistent returns on assets that really, really work for individuals. I've seen you talk to a lot of investors, a lot of our investors. You've referred people to us, people that want to invest with you using their IRA. So they come over to us, open up their retirement account with us. And by the way, it's a transfer. There's no taxes when you move your money over to us. So when Alex refers someone to us, they come over, they move their account over to us, then they refer and they invest straight into Alex's deal. And so, anyways, I'm happy to have you here. I don't know if there's a couple more questions here before we close up. Is there anything else here that specifically minimum? Look, minimums, Alex, you can share. I'm not sure how you do yours, but go ahead and you can share that question.
It's all deal specific. So the one we're raising right now, it's for accredited investors only, but it's a 50K minimum. But there are other deals that are 25K minimum, and it's honestly at the manager's discretion typically, even if there is a set minimum. But it's different for every deal. It just depends on the size of the raise, and so it's deal dependent.
Well, I love the comment there. That's a testimonial to me, or at least I'm proud of, is I'm interested in investing with you, Alex. I've been with Greg since 2017. I've nearly tripled my 135 in 6 years.
Nice.
So you'll hear from me. Look, that doesn't happen for everyone. I want to set those expectations. That maybe this is I'm being too negative here, but my goal is for people, if you're listening here and you have a retirement account, and take control and invest in what you know and understand. Nobody cares more about your money than you do. And so we're going to continue with these series. We've got a couple more. In fact, one of our good friends, Alex, a mutual friend of ours, next month, he's going to come on, Mr. Jay Scram. He's going to talk about oil and gas, which that can go all over the place. That's like almost saying cryptocurrency, in my opinion. So I can't wait to ask what Jace, a very successful friend of Alex and I's, is going to come on next month and talk about oil and gas. But in particular today, I got to say, look, Alex, thank you. Thank you for being here. If you want more education, more information, email us and tell us specifically what you want to learn more about. If there's a subject you want to hear about or an asset you want to hear about, tell us, and we'll have a guest on and come talk about it. Someone that we feel comfortable with talking to you guys. And so, is there anything else you wanted to share? I got one last question for you, Alex, but is there anything else you wanted to share?
I not really. I know there's some people who said, how do we get further education on, I guess, Imagine self-storage? So I do a lot of content on self-storage. I have a link. So if I give out my email and phone number, if you text me or message me, I have a link that I underwrote every single deal I've done, did a case study on every single deal I've done of the 9 we've done so far. And I'd be happy to share that with you guys. I don't remember off the top of my head, so I can't put it in the chat. But if you email me, text me, I'll send you the link. And hopefully you guys can check it out, give you a little bit better idea of how we found the property, what the add value we did, what the investors made on the property, and just give you a better sense of self-storage and what's possible and how to find them and add value to them.
All right. So to wrap up here, Alex, it's my favorite question to ask you. Share with me your sweet, sour, and service. What is your sweet, sour, and service?
Well, the sweet right now was this morning. It is the 20th week of my wife being pregnant. So we're halfway through. So had a big group family hug this morning with my wife and my daughter. So that was super sweet. The sour was, I hired a new executive assistant, and after 3 days, it didn't go so well. So I quickly fired her. So it just wasn't there. So that was kind of sad because I had a lot of interviews and she interviewed very well, but then came here and wasn't that great. So I'm going back to my other interviews. And then the service is actually this week I've literally been doing a lot of helping in education with some one-on-one people, not even like coaching students or anything like that, just people who've been reaching out to me. I had 2-hour conversations with folks who I've known for a while who are trying to get into self-storage. One's actually Dustin. So we actually have a scheduled call next week from our mastermind on self-storage, a deal he's looking at. And then I had one earlier today with a guy I've known for 10 years in real estate who's sick of doing rehabs, wants to do self-storage. And so I spent an hour with him today, just kind of breaking down self-storage and what he should be looking for, what's the opportunity out there look like. And he was super happy, to get that time. And I was happy to give it to him because we've done a lot of deals in the past together. So
love it. I will end with mine real quick. My suite is coming back here to the office, seeing my team. I haven't seen them in a couple of days, and my team is so good. I love the team, and so that's definitely a sweet. A sour is I just had a new baby, as some of you might know, 3 months ago, and I haven't seen my baby in 3 days, and so and when I say my baby, both my babies, my love and also my brand new little one. So I get to see them tomorrow. So that'd be my sour. And then my service is today. I drove back from a 2-day thing with my forum, and I took over the driving. So I drove like 3.5, 4 hours a day, and I hate to drive. It's not my favorite thing. So anyways, look, thanks for being on, Alex. You're a good man, and I appreciate the content, and hopefully this was good for all of you that listened in. And look, just know that you have opportunities. You can unlock your retirement accounts. You can invest in alternative assets, creative assets, like storage facilities. And so thanks for being on today.
Thank you for having me. Thanks, Greg.